What's up, everyone? Hello, YouTube. Hello, world. Hello, Discord. Hello, Twitter. Wherever you are, wherever you're watching this from. As usual, I hope you are all having a great weekend. And like most of you, I'm really looking forward to this week. We had a crazy week last week, hitting up to 1,000% returns on our Tesla call out, and a lot of other swings that finally started to mature in our direction. So for this week, same principles, same guidelines, right? We're going to be looking at around 15 or so names. But before we start, there are three names that I wanted to give some recognition from our previous watch list who ended up trading out in the direction that we wanted it and kind of the way we had it drawn out. So without further ado, let's go ahead and get started. Starting off the list, these are the three notable mentions. We have RKT to start us off. And I don't know if you guys remember, but we talked about the double inside week that we really wanted to see break through those external lows, take out sell side, and then trade back to the upside into our 20 target, which is exactly what happened, right? You can see we broke through those external lows, taking out the sell side, and then immediately getting 3 days worth of displacement. And this swing paid out really, really well. So looking at this one, you are at the broadening highs, but you did respect the open gap very well and pretty much recover back near high of day. I still think RKT is a good candidate to continue momentum into 2105 and even as high as 22.8. The other notable mention is Shop, which also kind of followed our I guess similar projections and the path that we had laid out for it, similar to Rocket Mortgage, right? We talked about a development into those new lows because of the confluence that existed within your post earnings gap, your previous breaker, your 618, and then look at the delivery out of that. So the same thing for Shopify, right? Once it clears this 148.50 hurdle, which is kind of like the last area to slow this down, I do believe this can still make an attempt into 155 and potentially 166 if it really has the breakout behind it. And lastly, the last one that we talked about was also SoundHound. I know you guys remember we us talking about a delivery down and respecting that overall SR flip and then trading higher. And so far, so good. From a weekly scale, this looks really, really good. And you also mitigated the weekly OB. And now you just have to kind of trade through that 50% of the mean threshold of this body candle. But for the most part, from a daily perspective, you got the dip into that SR flip like we wanted, and so far, so good. I would anticipate this to continue into the 1487 and as high as 1550. So now let's go ahead and get started with the actual watch list. First up on the list is Novavax. And this one's a pretty straightforward chart. The reason I like it is because of the buildup that it's having and where the buildup is located. So from our swing point low to our swing point high, that is a clear range, right? A impulsive range into new highs. So when I annotate my swing low to swing high off the fibs, right? The 618 and 75 underlies our golden pocket, which is the true discount of this potential established range. Because if we went from low to high and you retrace, this could be a good area to identify as a higher low, right? So I am keeping an eye on Novavax. Excuse me. I am keeping an eye on Novavax, and I love that you went previous week low into an outside day, followed by a pretty nice daily hammer. So I do think we can get some continuation into the 8.35, 8.63 to see whether or not this gap down is actually going to prevent us from going any further. But if it does break out, I am looking at 8.9, 9.2 to kind of finish this overall leg here. So really nice chart. I love where it's located, and I love the previous week low with the outside day sweep. That to me is showing that buyers are definitely the aggressors, and we have a little bit more LRLR to complete into the low eights on the lower time frame. So really good chart, really nice risk reward. And you're going to see a lot of the charts within today's discussion are all going to look pretty similar for the most part. The next one on the list, and this one already saw some really nice signs, is Hood. And I talk about the staircase compression type of price action all the time. So for those of you who are new, remember when I'm looking for an absorption of a potential like form of liquidity grab or like stop hunts that are going to continue in the overall trend direction that I'm looking at. So like let's say for example, you have something like this, right? And in this area here, right? When you get the retracement in your uptrend, that retracement could look something like this. So within this retracement on the daily, you could have something that's doing this, right? Something that kind of looks like that staircase compression, because all it's doing is you're generating liquidity, because when it's ready to run, all of those lower highs are going to get taken out. And so when I talk about those internals and externals, Hood was a really good example of that because of how it was developing. You can see like how you're getting that staircase. Like you're not getting aggressive sweeps that are holding. Look at the wicks, right? You break down, but then you immediately recover. You break down, then you immediately recover. And so for me, when I see something like this, it looks like it's a lot of stop hunts. And I do believe Hood has the potential to start going into those previous week highs. So my first initial target would be the 110, 112. And if it really wants to, you never took out the all-time high, 117.70, and you kind of stopped at 117.46. So this is still a very prime area to try and trade if this is all part of a range. Bottom of the range, top of the range, bottom of the range, potential top of the range. So at minimum, I am looking for 110, 112, and that 113 areas. Very, very good looking chart with a lot of pretty externals that are setting up in terms of that LRLR. So all of these lower high pivots become your targets. Next up on the list is Gilead Sciences. And very similar to Novavax, you have really pretty structure, right? Higher low, higher high, higher low, higher high, higher low, higher high, potential higher low. And look at the delivery out of that. So every time you've established a higher low, look at the delivery that comes out of that. So the way I'm looking at this is, does history repeat itself? Because we know price has memory, and it has not really shown any signs of exhaustion to break down against the structure. And I do love how we got a previous week high sweep back into the range, but we got daily displacement. So for me, I'm going to be looking to see if we can get an entry around that 113, low 114 area to potentially target into that open gap. So 118 would be my target, and even as high as 120 and maybe even 125 if the breakout is going to be, similar to how these other ones broke out, because each one displaced into new highs. So does it occur here? And I already got pretty good confirmation out of my discounted zone after the confluence of the respected gap and the sweep. So the question now is, can you flip this area here into a retest to kind of deliver you higher? It's kind of what I would like to see into that imbalance. Beautiful structure, beautiful daily. Now you just need that confirmation on a retest if it gives it to you. And as long as you don't get any daily closes back under that 113 mark, I think this should be good to continue up into the 116, 117, maybe even 118 areas. And then from there, it just comes down to the continuation of the trend. But really good area. I love the delivery out of your discounted zone. Now we just look for the follow through. Walmart. I love so many things about this chart. For one, right, you know that this is a very strong area of resistance until you broke out, right? You broke out, you came back, you failed to exhaust the lows, and then you had aggressive displacement back up. And now you have a really strong weekly imbalance where you wicked right off of a really nice trend line. So the way I'm looking at this is like, okay, you had a really nice manipulation sweep that ended up recovering back with aggression. That aggression is notable to me because of where you're wicking now. So what I would like to see, if I zoom in to the 4-hour here, I pretty much just want to see Walmart develop above that weekly imbalance. So anything above 98 on Walmart, I think can generate enough of absorption to kind of push you back up into the 102, even as high as 103 areas. So everyone should be keeping an eye on Walmart in terms of how you develop against that weekly imbalance, because it's also a very nice flip point, because you are failing to get proper closes above the gap, but you have really strong higher time frame narratives to kind of support the cause that this is now trying to establish some kind of higher low or whatever it is to break out into that 103 area. It's a really good looking chart. Could take some time. Just kind of watch it against the delivery within that weekly imbalance. And if it all holds very well, I think it makes it a good target to fill into that second gap. I've been talking about this for a month. I know everyone's probably annoyed, but once again, to me, this just has Wyckoff accumulation written all over it. And the fact that you're actually trying to show a lot more positive signs here, as opposed to when you were just breaking down, you had gap downs after gap downs. Now you had actually a really constructive wick from the gap up, and you held it really well, right? Back to back wicks. You already got your manipulation low, and you aggressively came back into the range, right? This acted as a mother bar. So now you're kind of just trading within that. But I do still think JD is setting up to get a strong push into 3250 and 3348. And if we get really lucky, 3433, right? You go from range low to range high. Beautiful chart, beautiful Wyckoff accumulation patterns. I really do think it's setting up for a nice push. 3250, 3370, and maybe even high 34s. MU, this one is really pretty. We talked about this one as well within the previous weekly watch list. This is also another notable mention, but I still like it because of the amass potential that's still sitting up, right? So when we're looking at this from a 4-hour lens, and we come in and we draw this, remember we talked about that staircase compression, right? Look at the result, and it trades out, but you take the internals and it gives you something different. So you go from a low to new high, high, lower low, higher high. So what I did was I came in and I anchored my fibs from that low to that swing high, and you see how you kind of compress price and then it just delivers again. Whoops. Like that staircase compression analogy, guys, it's really important because it creates path of least resistance. When price is looking for liquidity, it wants to go from one end to another, generally pretty easy. It doesn't really want to struggle. And that's why you see a lot of these explosive moves when you have those kind of compression charts and how easily it just glides right through it. Because if you can draw a trend line and you don't have like aggressive moves within that trend line, price is just going to go from one point to the second. And you can see how we established a really nice higher low at the 618. But I think this still has expansion momentum into 135 and the low 140s. Because when I zoom into the weekly, right, this is a weekly displacement candle that just took out every single high back from uh, June, right? So all that development just got destroyed within one candle. And I think this candle can give you that momentum into those low 140s and maybe even all-time highs. MU is still a really beautiful chart from across all time frames. So sure you're trading like the broadening highs, but now you have a gap up at the breaker, right? So now you have confluence here. So if this doesn't give you any direct momentum, any kind of reset into like the 128 gives you that fuel back into 135 in my opinion. CDNS, this one is just a pretty clean, I guess, post earnings gap with the LRLR that I like, right? Gap up, you see how you compressing price, and now you're getting here and you're starting to turn things around. I think now it's getting ready to go into that buy side delivery and potentially start pushing back into the 377s, 394 area. Nice perspective. The earnings gap also lines up from low to high. You got the staircase compression into the open gap paired with your confluence of the 618, and you also got exhaustion at lows, right? You failed to properly displace through, and now you're getting some really good development that could start to change the tide a little bit. I think what you can wait for is a confirmation above 355, and what you could do is if you get that break, you get the retest, and then I think you deliver. But this kind of staircase compression just looks really, really nice to see if you can get a strong breakout back into all-time highs. Really clean chart. I really like it. I just know premiums might not be as clean on it. Grab. This one is based off of lower time frame potential. So you can see the buildup of lows here that end up breaking higher. So what I can do is I can come in from here to here to identify if this is going to be actually a potential higher low that developed. And indeed it was, right? And you also did it with kind of that staircase compression where you're very tight, you're not getting aggressive breakdowns or breakups. Price is just kind of being absorbed. And look at the result, right? So now the delivery out of this 618, which is kind of what started this trend, I would like to see follow through into the low to mid fives, and then from here establish maybe another higher low, and then break out further into the high fives. But the way this is developing, we just got really good delivery at a potential higher low. Now we want follow through into previous month highs, which lines up with that gap. So 526 would be my first target, and then I would love to see a gap fill with a peak above that kind of comes back down, establishes a new higher low that then gets you into that domino effect that develops into the daily and everything. But I really love this chart. And I mean, you can even come in and do this, right? You can even come in and draw that little trend line or whatever. You're getting really good displacement out of it. And when you go into the weekly, you also went outside week. So really pretty buildup. You got a 1-3 on the week with a daily gap and daily displacement off of a potential 4-hour higher low. Super, super beautiful. If you get the push through, look at where the 0.27 to 62 line up right off of those highs. So first off, we want to take out the 526. Really good development. This would invalidate if you get a break below the 4.9. ENPH, I love everything there is to love about this chart. And then this is like one of the most simplest charts you could probably look at. It's just, dude, you have weekly displacement off of broadening lows, right? That weekly displacement just created a strong inversion gap off the lows. So as long as ENPH continues to develop above 35 and 32.5, you just went outside weak also off of the volume imbalance here. I think this has potential to run easily into 43.30 and even as high as 44. Such nice buy side here. And I can even show you, right? 43.25, 43.24, 43.65, 43.89. Like you have such a clean pool of liquidity here just asking to get swept. And so I think at minimum, I mean, you might need some time on this, but I think ENPH can definitely get you a strong breakout into that 43, 44, maybe go for a retest and develop further into the 48s. But I think the way this is trying to set up for the first time in a long time, ENPH is actually showing you signs of life and or buyers just because of the weekly displacement that countered the aggression into new 52-week lows. You respected the volume imbalance. You have an inversion gap at the low. So even if you come and test it, right, this can fail and still come down here and still be a good buy. But I think this is definitely trying to gear up into the 43, 44 with potential into the 48, 50 mark. Such a clean higher time frame chart, and you got a really clean daily break through that LRLR. You can see how you push into the previous Ukai, now slow down. You have an aggressive daily displacement. It's been going into a trend, so follow the trend, right? So watch this on any kind of retracement if you don't get the immediate follow through. That retracement will be your key into the 43, 44 area. Super pretty chart. DDOG. This one is also really clean. So first off, we're going to start on the weekly. You have a really nice weekly buildup. Pretty much since you had that crazy candle back in June, you've kind of just been compressing, right? And what I like about this compression and how it overlays with the weekly is that the daily is starting to show some positive signs here, right? From the last established low to that last established high, from this internal range, you came back and retested not only a really strong order block, but you finally came back to restructure this aggressive breakout and price came back into fair value. We came into a really nice region of discount. Buyers were definitely present for 3 days and you got the full body break. Gap up with displacement. So I think Datadog now, as long as you can consolidate above 131 and this aggressive move, I think you're setting up for some kind of build that potentially trades you back up into like the 142. And if the weekly kind of lines up with how this is building, because you now have a really nice inside week, like 142, 148, even potentially 154 could be your higher degree time frame targets. But I love how you came back and restructured the gap up. You came back and unified the order block that established the aggressive move afterwards. You have a nice higher low and then the delivery out. Remember, delivery out of discount. If you don't catch the actual discount, you can still trade the momentum if the delivery out of discount is still aggressive. because now we have a daily displacement that could come back and get a reset, right? Just because of how the daily tends to act, you could get a wick that hammers and then kind of bases around the 130, 134 that trades out into the 140 plus. It's a beautiful higher time frame chart with really pretty internals that can domino out into the daily and the weekly. Next up on the list is snow, and this is also very similar to there has been like a good chunk. I have been seeing a theme of like cloud names popping up more than usual, and this one is one that I kind of like just because from the established swing low to swing high, you have another earnings gap. You could see how a lot of my charts kind of look similar. That's because this is a proven and tested method for me, and it's giving me very repeatable results. So if I can find a lot of charts with similar patterns, because like I always say, price is historical, price has memory. If it did it once, it'll do it again. So similar to a lot of those earnings gaps, this one is also confluence, right? Breaker, earnings gap 618. Now you're kind of building here. So again, we missed the initial discounted zone, so now it's just coming down to the delivery out of it. Can we get an aggressive break on snow that trades us back into the 240 250 area? Pretty simple. It could be something like this too, though. You could kind of flag out and then go. So keep on watch for any kind of moves back into those like 207, 211s, because they could still be a really good dip buy if you don't get any immediate displacement through the gap here, right? Because gap down support sellers, gap up support buyers. So if you get one more driver down, that could be the potential higher low from a higher time frame standpoint. The last three or four are going to be just fun charts that have potential, but I won't really spend too much time. I'm going to talk about Oscar here because I know it's kind of hurt a lot of people, but I kind of like it from here. And that's because you have this really strong PO3 range that failed with the manipulation. I think now it's just gearing up for a move still. I think Oscar still has the ability to run into the 23s. Right, and now you got weekly aggression to do so and use for your advantage. So I think it's going to be more of like a stair step that eventually gets you there. But you have really nice signs of that kind of aggression to take you there. Just a fun chart, nothing too serious. Another fun chart is RKLB, and that's on the daily time frame here. So the only thing I would say to kind of be careful of, sorry, 4 hour, is the fact that you did displace into discount, which is not always my favorite, but these kinds of displacements can also give you those potential overlapping inefficiencies if you get the delivery you want. So if you deliver out, you now have a nice inversion here that you can supplement for confluence to give you further development. But when I look at this from a structure standpoint, right, you have this and now you have this. So if I bring this out, you have a potential inverse head and shoulders off the bottom of the broadening that developed. The only thing is, right, is this aggressive displacement. But you have really good delivery outside 3 with follow through on the 4. So if you can get through 47.38, I think RKLB still sets up for a move in the 54. I would say 53, 54 would be the target if you can reclaim through that 47. Because you have potential now, right? You have a really good established outside day off of your discounted range from the 4-hour structure. So if RKLB doesn't see any daily closes under the 41 mark, this could end up trying to deliver back out. And you have relative equal highs up here, 50.92, 50.90, right? Relative equal highs into 50.90. Now it just comes down, can we get that reclaim through that 47 area? But you did go outside day off of the discount after a previous day low sweep. So it has good potential. LRCX is a fun chart, and this one's more so just from the weekly standpoint. You just have a really nice flag being built here. And I think this kind of absorption could end up giving you a like 10 plus move if it breaks out in your direction. The last chart, the fun chart, is Amazon. Gap up, followed by a kind of, I would kind of establish this as somewhat of an inside day, but you had a strong gap up. You have one final pivot to take out. You didn't quite get there, right? 236. So I think Amazon goes into like a form of like a small base above the 228, 229 area because you have a really strong confluence of a gap paired with a previous high. So this area here is going to be very nice for buyers to kind of establish a good base, but eventually trade out higher. So I think Amazon's going to be one of those that kind of goes a little bit under the radar just because of how the day finished. And I do think you come into that like gap, test part of that breaker, and then try and trade back into the 236, 238 areas. And now, what you've all been waiting for, this chart I posted on X. Well, I didn't post the chart, but I talked about my favorite chart going into this week. Now, it can fail 100%, but there's so many things that I like about this chart. And the chart that is my all-time favorite headed into this week for a potential swing, just because of the characteristics and development that it's showing, is IONQ. Now, the reason why, right, there's 6 or so reasons that I really like this chart. The first one is we had consolidation, so a absorption range that only hunted sell side. Only the lows were taken. Right? You never really got any sweeps of the highs, intact, 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 right? You only went for sell side. Second is you had externals that were swept into a really high RR order block, because this order block is what established new 52-week highs before the range got created. You can see how we wick down into it after sweeping out the externals, and then you get displacement into broadening lows that were countered with displacement. So displacement into new lows countered by displacement. That creates our inversion. And you know I love my inversion gaps off of broadening lows because we are establishing a potentially new set of structure here. And from a higher time frame degree, you have what's known as your potential power of 3, right? And I just did a trade recap on this for array where you have the accumulation, manipulation, distribution. So the final reason I like this is because you have now internal compression. So you have really nice buildup coming from a manipulative low that was created, or sorry, that was then followed by really pretty price delivery. You countered a displacement into new 52-week lows with new displacement, and now you have really nice internal buildup. And honestly, as long as IONQ can respect 37 through 38, because if you take this from a maybe like a hourly time frame, look at where the golden pocket is. Like if you do break down here, I think anything between 41 and 38 is buyable for a move into 45, 48, and maybe even 51. But there's just so many pieces of confluence that you can add to this name. And these are the deviation projections from the manipulative low. So this manipulation leg, this is the projections. So the -1, -1.5 literally line up with the high of the range. And then the -2, which would be the potential end goal, 51, right? Now you have this really pretty internal buildup. Even if you come down into this, you establish a higher low that then trades higher. So regardless, I'm looking to see if I can get some form of position on this on a maybe kind of manipulative sweep and trade this back into the 45, 47, 48, 50. But I love this chart so much, and the invalidation for me would be a daily close under 37.40. If you get a daily close underneath this, then this entire plan fails. But I love so much about this, and it's probably my favorite chart. And yeah, that pretty much sums up the watch list. Once again, we got into that 30-minute mark. You know, I like to keep my videos under 30 minutes because after that, I feel like most of you would get bored. So if you have any questions, if you have any comments, drop them down below. And as always, please like, subscribe, thumbs up, and share with all your friends. Hopefully you guys have a good trading week, and I'll see you later. See ya.